This is Dr. Jeffrey Scott, and this is my Markets in Minutes for September 3rd, 2023. I titled this, Will the Summer Rally Continue into September? My email address is jeffrey.scott@topdowntrader.com. Any questions at all, tools, process, comments, please reach out to me. As always, this is for educational purposes only. I'm a doctor, not a broker. I'm independent. I paid for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. And just a very quick reminder, the Wealth 365 event is coming. I'd love to see you sign up with me. I usually stick the link into a comment box so you don't have to worry about writing it down. It's free to attend. It's 6 days, 50, 60 different speakers, lots of free stuff and lots of free education. So I'd love to see you there. Let's take a look at the markets, and this is my Tradestation review. So very quickly, if I go into my market timing system, which requires a price close above a 30-period WMA, and then the proprietary bongo indicator to be in a buy, which is blue on this platform, you can see that on the spider and on the Russell and on the diamonds, we've got blue bongos, prices above the 30. We've gone into a buy across the board, and that's an improvement where we had red bongos before. Surprisingly, the only one that hasn't switched yet, and I'll put it 50-50 and a yield sign, is the Qs, where the price is great. Probably on Monday, the new bongo will print, although it doesn't finish the weekly bongo until Friday, and we'll see if it doesn't turn positive. So the markets look 3 out of 4 buy, 1 out of 4 caution. I think it's okay to still be looking at the longs. When I look at my marker meter with the weekly charts, I'm looking for evidence of any of these lines coming here, Phoenixes, Eurekas, Hindenburgs, and I don't see anything. You can see on the NASDAQ composite, and this is on a daily chart, not a weekly chart, excuse me, the bongos have both gone bullish, the NASDAQ composite and the S&P 1500. If I look at the daily markets, you can see we are above trend lines on the spider, the Qs, sort of in a triangle, continued on the diamonds, and each of these closed above their 50-day moving average in yellow. None of which are up, touching their high jump. The Russell had really a big day on Friday, breaking above the 50-day moving average. And really becoming more bullish than it's appeared for some time, and it was up over 1%. With the markets doing well, we saw continued sell-off in volatility, UVXY, VIX, whatever you want to look at. The worrisome thing is where the week started with the dollar selling off hard. I think that was Tuesday. And then it ended with a equal and opposite recovery of the dollar. I think the way the US dollar goes in the 10-year yield, the market goes opposite. If the dollar breaks out here, then I think we may have some heaviness in this market. Same thing with the 10-year. One day does not change everything, though. If I look at commodities with the dollar strong, you'd expect weakness in the metals. You can see gold here and silver failed at their trend line. They'll be under pressure. Interestingly, nothing can stop oil, which continues to run away. It's in a very nice uptrend. Natural gas is flat. And here's the 10-year after coming down for the first 1, 2, 3, 4 days of the week. It had a reversal on Friday. Here's the 30-year. Now, does that mean this market rally's over and these are going to go back and threaten new highs, recent highs, in which case the market rolls over? It's certainly possible. That's why I'm watching the dollar and the rates very, very closely. When I look at the markets, I want to find a way in Tradestation to really help me sort out what's working. So what I do is I can look at force in various time frames, my modified force, where I eliminate the impact of volume. But how about looking at very short-term relative strength? What's outperforming? Well, we know on the markets, the Russell, the diamonds, and the spiders outperform the Qs. No big surprise there. When I look here at, and I rank the sectors, energy, materials, and financials, did well. Technology was up 0.31, but was lower on the relative strength scale. And when I look at my max ETFs list, which is just a bunch of ETFs, I can see that the leadership is oil and gas, equipment, oil services, China, oil producers, and then interestingly, biotech, and then regional banks, and then China. So we had a lot of energy here. So what I can do now is ask the question, Do I want to look at the XLE? Do I want to look at producers? Do I want to look at services? Well, services looked interesting there. So one thing I can do is I could come down here and I could bring in a list. So I built out for the people that purchase my tools a bunch of ETF containing the stocks. So let's look at OIH, it's just one of the major ones, so it sits right here. And I could just bring them into this and look at how are these doing and what's leading. So let's do the relative strength one day and get a sense. And I'm seeing Neighbors, P10, OII, DRQ, Pump are some of the leaders over one day. And if I look at over a 5-day window, it might look a little different. Helix, RIG, WHD, FTI, so a lot of the same. So I could just look at the biggest outperforming, but I built up a scanner. So in the scanner, I could actually bring in that OIH, which I did already. I can then run my scanner and it's going to look at my favorite signals across all of them. And then I can go in here into filter results. I can go open and pull up pullbacks and uptrends, hit OK, and I could see, and then rank it by a number of dots, that I have a number of stocks that have pullbacks and uptrends. So the daily bongo is a trending indicator on a daily time frame. The weekly is on a weekly, and I've asked only to find stocks that have had a reversal within the last 9 bars on the daily, and the weekly has been green. The daily relative strength versus the MA is looking at a ratio chart of the stock to the spider, and then a moving average. I want to see the stock outperforming the market, so I want it above the moving average. The high-low jump is a measurement of my extension, and then I have regular old relative strength. So the first one on the list is NBR, and NBR looks interesting. They're all going to have this 200-day, or not all, many overhead, many of them. But here's a really clean breakout with volume, breakout, and momentum. This is the relative strength taking off, and OBV is actually crossing above its moving average. And you can see the red here shows when the instrument pulled back and then it started going up again. So the only thing I don't like about NBR, beside the fact that its relative strength is kind of low, is it's got some overhead supply. DRQ, this one is in a squeeze as well, and we could see the squeeze of the yellow dots. Now, this one looks more compelling to me. Why? Because it broke through resistance. This is what I call my CPR indicator. This is my EMS signal, which is an independent buy-sell signal. Here's a breakout in momentum. It had volume in the prior bar coming out of a squeeze. Relative strength and OBV look good. DRQ is probably the choice so far. RES, I think they make a lot of the pipes. Nice breakout here, but it's got the resistant lines above. RIG is another one that looks interesting here. Pull back to the 50 and then broke out a nice strong pattern. And then CHX. So the strength in this market is energy, and CHX also looks good as well. If I look at the market as a whole, this is a larger list of about 2,500 stocks. And let's look for pullbacks in this one as well. I just like buying pullbacks and uptrends with a new breakout. And then let's rank them by the number of dots and look what comes to the top. There we go. That's why we're down here. Okay. So, a couple to show you. There's a lot I like here. Let's just go through them. Val, this is I believe an ore company. I told you that materials was moving. I don't like the overhead resistance. Dell had a nice breakout. The question is Dell extended? Had a big gap. So it had a new EMS signal, a big gap up, volume, breakout, momentum, coming out of a squeeze, and relative strength and OBV are great. The problem with Dell is it's extended. How do I know it's extended? Because the high jump is 100%, and that says its distance from its moving averages is the greatest it's been in a year. So I would be careful on Dell. I don't know, Afia Limited, I don't know if it doesn't have the volume, but let's see what it has. I think I'm going to ask Van, my programmer extraordinaire, to put volume in the search. I don't like the overhead resistance. PSTG, a storage company. got a break above resistance. PXD, oil exploration, like so many, has resistance overhead. Elastic is another one like Dell that broke out in earnings. And you could see it took out its resistance there. Its high jump is 100. That's the problem. It's extended. Lulu, another one, great on earnings. I don't believe this one's as extended though. So you can see the big breakout gap, volume, breakout momentum. It's at 67%. I can still buy that. It's not overly extended. MDXG is another one that I like a lot. It's in the medical device category. Big uptrend, pullback to resistance and a breakout. New EMS, volume, breakout, momentum from the squeeze, relative strength and OBV look good. How easy can this be? This has been 10 minutes, top to bottom, top down, sector, industry group, and stocks, and have an awesome week in the market. Look for the markets in a minute every day on YouTube, posted sometime around 10 o'clock each night. Thank you.